Hello, welcome again to FairtaX Power Radio. I'm Bob Paxton,
I'm Bob Scarborough.
and we are the FairtaX Guys. And I do have Fat Albert, and you are still hidden away under the Witness Protection Program and unable to have your official FairtaX scrolling banner.
All of my identifying material has been left behind.
Indeed. Well, speaking of left behind, we mentioned this a couple of weeks ago that the scrolling banners are not going to be reordered when the current stock at the fairtaxstore.org runs out. They just cannot find a supplier that's going to supply that to them in an economically feasible fashion. So those will be going away. So you need to go to fairtaxstore.org if you want one of those scrolling banners before Scarborough scarfs the rest of them up.
That's not going to happen. But I am going to look and see if there's an alternative resource for that particular product that we might be able to obtain.
Good. I can put you in touch with the guy that runs the store. He would be happy to hear that if you can pull that off. But
yes.
We are back into 2026 here on FairtaX Power Radio. Interesting program last week with Steve Hayes. If you haven't seen it, you need to go back into the video archives, both on our FairtaX Guys YouTube channel and also our archive on Rumble, and check out the 2026 State of the FairtaX with Steve Hayes, and that was pretty interesting. We'll have him back pretty soon. But now we are back into the regular swing of things. And I guess you look like you're up in a little mountain cabin. So I got my mountain steam locomotives here in my background this time. Sure. So we'll see how that goes. But actually, over the holiday, there hasn't been a tremendous amount of activity in Congress.gov, but there are a couple of little things that I'd like to touch on that the Congress critters are up to. And as I say, we did our Hall of Shame program a couple of weeks ago, so we will be starting our new 2026 tax proposal Hall of Shame as we find stuff that is appropriate to put in there as we go through this calendar year. We will start out the new year with H.R. 6929 from Representative Eleanor Norton, D.C. at-large representative. This is a bill to amend the Internal Revenue Code to allow federal employees who are separated from federal service. I guess that means people who no longer work for the federal government. You're going to allow those people to make penalty-free distributions from thrift savings plans and include such distributions in gross income over 3 years. Don't you just love it when the government tells you what you can and can't do with your own money?
It absolutely is, and showing favoritism too. I'm sure that there would probably be some private sector individuals who would love to have the ability to do that and move certain obligations in terms of taxation to a different year or out into the future where it probably is not going to impact them as badly as if it were done like the rest of us do it.
Ah, Murphy. Well, that's the beauty of the fair tax. It treats everybody the same, and that's just all there. Nobody pays taxes on their basic necessities purchases. Above that, the more you spend, the more you pay. End of story, and you don't get all this garbage. Okay, H.R. 6912 is the next one from Representative Stephen Horsford of Nevada. This is to amend the Internal Revenue Code. This one makes me laugh. To exclude certain combat zone compensation of certain service members. So apparently certain service members are getting combat pay related to remotely piloted aircraft from gross income. So they're saying that they exclude your combat pay from gross income if you are a certain service person remotely piloting it. So you're getting combat pay for sitting somewhere, I don't know, in Arizona. I don't know where they have these things, but you're remotely controlling a drone over a war zone, and you're getting combat pay for doing it. Oh, mercy. Oh, well.
When you're sitting in a chair with a cushion behind you and armrests and everything, and you've got computers in front of you, it's like playing a video game.
Oh, I've flown a little unique drone, so I know that that's quite like flying those military drones. But anyway, so they want to make, again, this is where you cannot define what income is. what is and what isn't income. You're going to exclude certain combat zone compensation from your gross income. And again, under the fair tax, spending is spending. If you spend on new retail goods and services, you pay the fair tax. End of discussion. No more going on there. We need to get rid of all this complexity and replace it with elegant simplicity, which is exactly what the fair tax does. All right, here's another one.
Transparent too. It makes it transparent too. You see exactly what you're paying for tax.
Okay, this one is from Representative Beth Van Duyne. I guess that's how you pronounce it. VANDUYNE. This is from Texas 24, HR 6824, to amend the Internal Revenue Code to establish a tax credit for, see if you can explain to me what this is, qualified combined heat and power system property and for other purposes.
Property?
Combined heat and power system property for other purposes as well.
Like a window air conditioner or something?
I have no clue whatsoever. But
Battery?
one more here. HR 6787 to amend the Internal Revenue Code to create a carbon border adjustment based on carbon intensity and for other purposes. That's something else about the fair tax we probably don't mention enough. It is border adjustable. I mean, you don't have to mess with it.
Right. It's simple and effective and efficient.
Indeed. So that's to amend the internal to create a carbon border adjustment. So you need all this other extraneous stuff with the income tax that you don't need with the fair tax. And so we just need, as Steve said, make 2026 the year that the fair tax gains incredible momentum, in 2027 as the year when it actually gets implemented. Yep. Hopefully all that will happen.
What a day to celebrate. What a day to celebrate.
Indeed. Well, that is actually going to be a fairly short version of the Congress.gov segment. We need to get back to something that we started a couple of weeks ago, because I get solicitations all the time at our FAIRtax Guys gmail.com email address. People say, you have a great podcast, but if you'll pay me a whole lot of money, I'll show you how to reach a whole lot more people. And of course, none of those people want to guarantee that their advice is going to work. But we've got folks that the fair tax has been around for 20 years. It has not gotten the traction that, of course, we would like to see it happen. But of course, the theory on that is it doesn't matter how professionally produced your podcast is, how much it's promoted, how big the advertising budget is, how many different places it's in. If people aren't interested in the subject matter, they're not going to listen to what you have to say. And I fear that tax reform has just traditionally kind of been not a front hot button issue for too many people. So we have got to convince people that the income tax system is all messed up and needs replacing before we can really plant in their head that we need to replace it all with the fair tax. So a couple of weeks ago, we asked an artificial intelligence application, give me the top 10 reasons of things that are wrong with the income tax. So folks, prepare to be convinced that the income tax is all messed up and we really do need to replace it with the fair tax. We got through the first couple of points a couple of weeks ago before we had to take time out for our Hall of Shame and save the fair tax episodes. But we're back now with what is wrong with the income tax. And you may start, sir, with point 3, if you would.
Yeah, fair tax, income tax favors wealth over work. Wealth over work. Capital gains and investment income are taxed at lower rates than wages, and unrealized gains often go untaxed. This benefits high wealth individuals whose income comes mostly from assets and not labor.
Well, I'm afraid I detect a good bit of political bias in that statement, because capital gains and investment are taxed at lower rates for a reason, because investment is one of the things that drives a healthy economy. And you would want a tax system that encourages investment, and so the income tax, the best they can do is that, well, we'll tax those proceeds at a lower rate than regular ordinary income, which actually I think is a good thing. But a better thing is, how about we don't tax investment income at all when it's earned? We tax it when it's spent. the same way as with any other income. And that is what the fair tax does. It will encourage investment much, much more robustly than this provision does in the income tax.
Encouraging savings.
Oh, absolutely.
You get to decide when you pay tax when you go to the cash register to buy a new item or a service of some kind. It's just better, much better.
Mm-hmm. And I get kind of take issue with this thing too that said unrealized gains often go untaxed. Unrealized gains means that when you own a stock or own some kind of capital asset and the value of it appreciates, on paper anyway, you've made some money, but you don't have that money in your pocket or in your hand. And taxing unrealized gains is taxing money that people don't have. And I'm sorry, I just don't think that's right. And the fair tax will never, ever even think about taxing something that you have only on paper. The fair tax will tax your actual retail spending on new goods and services. And of course, people say that is a tax on wealth, because a lot of people have a lot of money that and relatively small incomes. They make a lot of investment income, but but then again, the fair tax is going to tax all your wealth. All wealth is eventually spent. If not by the person who acquired it, it's by their heirs when it's passed down to them. So the fair tax does a much better job of encouraging investment income by not taxing it at all. You will not tax unrealized gains. And of course, high wealth individuals whose income comes mostly from assets, not labor, are still going to pay the fair tax at the same rate of people that make their income, working for a paycheck. And the more you spend, the more you pay, because there are no loopholes, there are no exemptions, there are no deductions. I mean, if you buy something, you pay the tax, it's included in the price of the item. It's much, much, much more difficult to evade than the current income tax system is. And so again, we need that's what's wrong with the income tax, a bunch of stuff here.
Right. And you get to see the actual fair tax amount on the receipt. It's inclusive of the cost. In other words, you have your items that you buy. There's the fair tax shown on the ticket, and there's the bottom line of what you write your check or use your debit card for. Much in the same way, fuel is priced. You go to get gas in your car, and you end up seeing the total price on the pump of what you're paying, including the federal taxes and the state taxes on that. Fuel.
Yeah, motor fuel, be it diesel or gasoline, is among the most heavily taxed things that people buy at all, and they bury those taxes in the price. And your receipt does not show you how much of that. It's about $2.75 a gallon now here in Florida. How much of that $2.75 a gallon is actually taxed? It's quite a good bit when you add the federal taxes and the state taxes, and in some cases local taxes at all. But you never see how much of that $2.75 a gallon you're paying for gas is actually taxed. But when the fair tax is included in the price of everything you buy, including gasoline and diesel, the receipt will indeed show you how much fair tax you pay on every transaction you make. So it is incredibly transparent, much more so than the current income tax system, because when you buy something now, a portion of what you pay for any item you buy, be it a product or a service, ends up at the IRS as the seller's income tax, meaning there is an income tax component in the price of everything we buy that you don't see on your receipt.
That's right.
And all that goes away. So,
next one is high compliance burden. That you take that one.
Next item up for bids here. This is something we've talked about a lot, and just a couple of sentences that came back on this inquiry does not do it justice. The high compliance burden. Filing returns is time-consuming and expensive, it says, especially for small businesses and individuals. Paperwork costs often exceed taxes owed for some, which means you spend more in compliance costs than you send to the Treasury, and errors lead to penalties or audit. High compliance. People don't understand. I'm sure that people, if they understood just how heavy the compliance burden is on them, and they've been conditioned just to kind of, shrug it off and not really pay much attention to it. But the hours that you spend, the money that is spent, just simply complying with the tax code over and above the income tax liability that is assessed when you're finished with the process is huge. It's in the billions of dollars and billions of hours.
Exactly. And we always say that a small business owner, maybe a husband and wife team or an individual with 2 or 3 employees, and that's it. All the time that he spends in compliance could be spent on something else, like coming up with a new service idea or innovating to help him compete in his industry.
You know about that firsthand, running the radio station back there in Winston-Salem. What could you do in addition that you're not doing now? What could you do with that radio station if you didn't have to spend time and effort complying with the tax code?
Well, there's only a certain amount of time given, in any particular day or a month or a year. And, if you actually sat down and looked at weekly or semi-monthly or quarterly or annually, the time that you spend keeping up with reporting, paying those into that particular system of keeping up with the income. You have to do it not only for your business, you have to do a certain amount of it for the people that work on the staff level. There's probably 30 to 40 hours a quarter for me that goes to a week's worth of time every quarter, cumulatively speaking, that I could be doing something else. I don't know, taking a nap.
Just how much of that is done by station personnel and how much of it is contracted out? Just thought off the top of my head there.
Yeah, no, a lot of it done within the company annually, of course.
So it is costing you the time and effort of your people who could be doing something else more productive for the station, but instead they're tied up messing with the tax code.
Exactly.
Oh, that's nasty. So we could do a whole program if we wanted to get in. Now, I may ask another artificial intelligence thing. Explain to me exactly how much the tax compliance burden is under the income tax, because this query just brought back these couple of sentences saying that it's time consuming and expensive. Didn't give any examples, but we just know from past experience, you're talking billions with a B, billions of hours and billions of dollars that people spend just complying with the tax, filling out the forms, and then that's crazy. All right,
understanding publication 17 and so on, and that's an insight. Yes. You can go back and look up publication 17 IRS, and you'll know what we're talking about.
That is your favorite reading material. It supposedly explains what you're supposed to do, how you're supposed to do it, this, that, and the other. So yeah, go on the IRS website and call up, get yourself a copy of publication 17. And again, pay special attention to the part that says you have to report on your income tax the fair market value of any items that you steal and do not return.
Or borrow from your neighbor and didn't get it back by the end of the year. That's crazy.
Oh, mercy.
Nutty thing. FAIRtax solves a lot of problems, especially
that's the craziness that exists in the tax code. We look at the proposals that the Congress critters are trying to do to it every week here, but what's actually passed it into law, I mean, just a conglomeration over 100 years. Was the income tax first passed in 1913?
I think
2025.
I think it's by design that they make it and keep it complex.
Oh, so, absolutely, because there's an entire industry that exists to help people navigate that complexity.
Yeah, that's part of. I think that's part of the reason why, along with the politicians, why it hasn't changed in all these years already. So, We
As
talked.
Steve mentioned last week, we have got to make this a winning issue at the ballot box. The people who write the tax code for their own advantage, not for us, have to understand that we, the voters, are going to show them the door if they don't start doing it right.
That's absolutely, without a doubt. You know, one of the other things that is a challenge with the income tax is the distortions of economic decision making and processes, discouraging work, savings, investment by taxing productive activities. This is sort of what we talked about a minute ago. Critics argue that this reduces growth, job creation, and capital formation compared to consumption-based taxes like the fair tax.
Well, that what you just mentioned is the entire genesis of the fair tax. That was what spurred the businessmen in the mid '90s there in Texas that decided, they realized that they spent the entire day their corporate meeting trying to plot the path forward for their company. They spent most of their time talking about the tax consequences of various decisions and not about what was the best thing for the business to drive it forward. So they realized, wait a minute, we have got to have a tax system that is not as intrusive, does not require this kind of thinking to that's going to interfere with our businesses to that degree. So there's got to be a better way. And that's when they commissioned the economists that actually designed the fair tax, because they realized that they weren't talking about moving their business forward. They're talking about dealing with a tax code. So that's the high compliance burden and the complexity and all that stuff thrown into one. That, folks, is what is wrong with the income tax and why we need to replace it with the fair tax.
Absolutely.
Okay. All right. We can get one more point here before we run out of time on this edition of FairTax Power Radio. Insufficient enforcement and the tax gap. Of course, it was a big deal not long ago, or I guess a while back now, when the previous administration said they were going to hire thousands and thousands of new IRS agents and ramp up enforcement on high income individuals and companies, but it's still an impossible task. Insufficient. But what's it now that the less than 1% of tax returns get audited?
Yeah, because they're still on DOS 1.0. Well, actually, I think they went up to 3 so they could start networking some of those computers together.
Okay.
Yeah.
But anyway,
I mean, the time it takes. And what are they going to do? Are they going to put your return in a barrel and kind of pull it out like a bingo number, or where all of a sudden you're the one who's getting the scrutiny under the microscope of an audit?
I don't know. Again, this AI inquiry that we've asked about what's wrong with the income tax just brought this back as point number 5. The IRS lacks resources to audit high income evaders. Now, there are some people that like probably Elon Musk and Jeff Bezos, these ultra wealthy individuals know that they're being watched. But if you're not up there in the rarefied stratosphere of ultra high income earners, there's a really good chance that you're not going to get audited, because less than 1% of the tax returns get audited. It says it leads to hundreds of billions of dollars in unpaid taxes, and now it's actually the tax gap, which is the difference between what is legally owed and what is actually collected. That tax gap is now approaching, if it's not already there, nearly $1 trillion a year is being left on the table on current income taxes. And I'm rather surprised in some way that number doesn't get the attention of the Congress critters up there who love nothing more than spending money. So wait a minute, we could have another $1 trillion to mess with if our tax system was not so inefficient, so easy to evade, and just so thoroughly broken. But yeah, the tax gap is immense in this country. And unfortunately, it's not going to change until we replace the entire system with the fair tax. Will there be some evasion of the fair tax? Probably so. Where there is a tax, people will find a way around it. But we have seen studies that have indicated that changing from the income tax to the fair tax would eliminate about 95% of illegal evasion. I mean, again, how do you evade a tax that is included in the price of the things you buy? I mean, if you're going to
Correct.
cheat the income tax, all you need is the ability to do some rather creative math and the incentive to do so. But if you're going to cheat the fair tax, you've got to have an accomplice on the inside of the store who is risking his job. And so that's just not going to happen. The evasion rate under the fair tax is going to be next to nothing compared to what's done with the income tax. So the tax gap pretty much goes away with the fair tax.
And you also end up in another benefit along those same lines, where you have 155 million or so taxpayers.
Mm-hmm.
You go to a tax on consumption, HR 25, the fair tax, and that number goes to the entire country. Everybody that's going to the cash register to buy anything, 318 or so million citizens in the United States, plus all of the nefarious activities that take place, drug dealing, et cetera, a cash economy in general are going to end up with, at the cash register to buy whatever they are going to buy with the money that they get through ill-gotten gains.
Yeah. So there is a lot. That's a double underlined, capitalized, and in red, a lot that is wrong with the current income tax system. And people have got to understand that there is a better way to do it. The better way, of course, is the fair tax. It's been around for over 20 years now in Congress. And hopefully that Steve Hayes is right, that this year, 2026, will be the year when tax reform really catches people's attention, and that we can keep the momentum going and actually get the fair tax passed into law next year in 2027. So we will continue every week here on Fair Tax Power Radio, looking at Congress.gov to see what the Congress critters are trying to do to the tax code. We're recording this program actually on January 2nd, so there has been very little activity in the year 2026 so far. But hopefully in a couple of weeks when we do our next recording session, we will have lots to report on what the Congress critters are trying to do to the tax code. And it's just there is so much wrong with it that we've got to get people to understand that it's broken beyond repair, and that we do need to replace it all with a fair tax. So I'd like to hear you if anybody has a story of what they have found to be wrong with the fair tax. The FAIRtaxGuys@gmail.com. We don't mention that email address an awful lot, and I really don't check it every day, but I'll check it every so often. But I'd like to hear from you. The FAIRtaxGuys@gmail.com is our email address, or you can leave a comment on the video. Tell us about what you have personally found to be wrong with the income tax and why you would like to see it replaced with the fair tax. But until we meet again, I'm afraid that's going to be all she wrote for this edition of Fair Tax Power Radio. We're slap out of time again. Hopefully, Mr. Scarborough will be removed from the witness protection program and will be back at the radio station next time we talk to you. But enjoy your vacation.
Thank you. I've got a couple of forms I've got to fill out to see if I can get out of the doghouse I'm in.
Okay. All right. Well, anyway, again, thank you for watching. Thank you for sharing these videos on social media. That helps us a great deal. And until we meet again, same time, same channel next week on Fair Tax Power Radio. We are the Fair Tax Guys. I'm Bob Paxton.
I'm Bob Scarborough.
Reminding you that the fair tax is the only truly fair tax. And once you understand it,
you will demand it.
So what would you do for her?
We've got several programs that will help her. We just need to find out how much she makes. But the good news is, the less she does, the more we can help.
Yeah.
If I may, with the fair tax, we wouldn't even tax her income. So the more she makes, the more she has.
But still, a consumption tax could eat up a lot of her income.
Which is why at the beginning of every month, we're actually going to give back all that she pays in taxes on basic necessities.
You're going to give her back her taxes?
Every month. On everything taxed on basic necessities. But we're also going to give it back to you and to every American citizen.
Why?
Well, we believe taxes should be fair.